What is up, guys? Today is currently Monday, and I'm just basically doing a market structure tutorial for US30 and showing you guys what I exactly do to find trades trading US30. So the first thing I do is I usually go on the 4 hour, right? So I go on the 4 hour, and then I go on the 4 hour, and then this is the time frame I use for my trend. And so it's obvious. So if the 4 hour looks like it's going up and it's ascending, then I know that's my long-term trend. Down, descending, I know it's my short-term trend, right? So the first step I want to do is I want to zoom all the way out, and obviously we look like I'm sorry. Obviously, it looks like the trend is ascending on the 4 hour. The reason it looks like it's ascending from the past is because I actually marked up structure on the daily chart, which here I normally don't do, but sometimes I do to understand a long-term giant picture of what's happening, because US30, it has a complicated market structure, and sometimes it's helpful to utilize the daily chart 4 hour and all these time frames to actually understand what it's doing. And that's what it took for me to understand, because when I started going on the daily time frame, that's what actually allowed me to trade it properly and understand the time frames better. So on the daily time frame, we can see we have an order block right here towards that low that propelled and broke up this high, right? And I originally thought that price up here was tapping into this imbalance slash supply up here from the daily chart, right? Which it can, but I actually noticed something else on the weekly chart. On the weekly chart, we have a zone right here, and price. I'm only going to be looking at long-term buying if price disrupts this daily trend. But I'm not going to go that far. I'm going to go back down to here. So my short-term or my long-term trend, I usually use the 4 hour. The daily trend, that's more of a that's more to control the length of time of the 4 hour trend. So the daily chart I just use to actually understand when the trend of the 4 hour is going to end and begin, right? Okay, so with the 4 hour trend, ignore the big blue lines and pay attention to the small ones. We're bullish. 1 hour, we go closer to 1 hour. I don't really use the 1 hour chart a lot. So once I establish the trend on the 4 hour, and I look at the daily chart to monitor the 4 hour to make it to it's like a confirmation. Then I go to the 15 minute and the five. Well, the 15 minute doesn't really matter either. I use the 15 minute kind of for order blocks to check in supply and demand, but I paid more attention to the 5 and the 3 minute. So if we go here, we can see that those blue circles are highlights that highlight the market structure that maintains this trend of it going down, right? Because the only way it looks down, because we had a high that breaks the low and the lower lows that get broken, and that's actually what makes it look like it's going down in the first place. So you're going to want to go here, and the only way I'm buying, right, because I'm expecting to buy, but the only way I'm buying is if I see price come out and disrupt this trend here by breaking that breakup structure. And usually the 15 minute time frame is what I like to actually use for breakup structure. So breakup structure is when the trend shifts and changes. So right now we have a high, we have a low, we have a previous low and a previous high, which the trend is bearish. But if we have a disruption of the trend, that means that price is going to break this high structure. And by breaking it, that means that, okay, well, if it breaks it, that must mean that there's enough demand in the market, enough money that's potentially be could potentially be trend shifting. And initially, this is on the higher time frame. I want to see the market come down and then go up before trading. But since we already have that confirmation here on the 4 hour, which is my trend being bullish, that means that I can actually depend on one breaker structure. Okay, so yeah, what I mean by one is by price going up like that, and then I can actually look for a demand zone down here versus waiting for it to come down here and then move up again. So I can actually just only wait for price to move up once because I have confirmation on the higher time frame. So yeah, that's pretty much what I'm doing, guys. I could, if I really wanted to, I could trade this and I can continue selling, but I'm not doing that because I'm expecting price to go up. But here's the thing that I want you guys to pay attention to. If the market continues to go down and it goes down like that, then what that means is that actually can be a confirmation of what I said earlier about this potentially shifting because of what we have up here, right? The market could be tapping into that supply on the daily chart and shifting this whole trend here we had on the 4 hour. and that's why I'm not selling yet. I'm only gonna sell when I have confirmation. So in trading, when you trade smart money or institutional concepts in general, or fair value gaps, order blocks, the best confirmation is break of structure because it actually shows you when trend is shifting. And the beauty about break of structure is the fact, guys, that you can actually rely on different time frames to give you confirmation on whether it's true or not, and then thus creates your high win rate in trading that you guys like. But yeah, that's a major tip I have for oil. So the 4 hour use for long term trend, the daily confirm that long term trend, and make sure there's no demand being tapped into on the daily. And then go to the 3 to 5 minute, and then look for your market structure. And then the 15 minute is your trend change. So when the momentum on the 15 minute changes, that usually will change the 1 hour and the 4 hour. And yeah, guys, I hope you guys found this helpful. Um, and yeah, I'm actually gonna do some more here. So here's what we're gonna do. We're gonna go and look at. We're gonna go and we're gonna look at gold, or another pair. We're gonna look at something else. Right now, okay, here's another pair. We have UJ. I also trade Forex too. So we have UJ here. And UJ on the 4 hour, I use the 4 hour for UJ too, for the long term trend is bullish. On the 5 minute, it's bearish. But the selling has slowed down. Because if you notice, we went from here to it being fast and slowing down here. And so I would not be selling. I would be looking to buy, which is what I'm already going to do because we're bullish on long term. And so those gray boxes that you see specifically represent those demand zones that the market can, or that I'm looking for, it's that I'm expecting the market to reverse from. And so the market can either reverse from where this blue arrow is pointing to now, or the market can reverse from this demand zone down here. And when the market reverses it, here's what I mean. Here's how I will actually buy. So let's say the market comes down to this bottom box with the blue arrows pointing to, and it consolidates here, and then we see an expansion, and it expands to the upside and breaks all these structures, right? And breaks. Then I can look for possible trade here towards the low. When I'm buying, I'm always buying low, so I would look for a trade here. I have better risk management that way too, versus trying to buy all the way in the middle or at the top usually. But yeah, guys, so that's what I'm doing. You never want to buy. People always buy. That's why people can't buy at the bottom of the market, because they always try to buy the bottom of the market, and then they don't wait for a break of structure slash break of structure. All that means is you're waiting for the money to come into the market to change the trend that you initially had, and then without that change, you don't really need to be in the market, right? And yeah, you can continue to sell this, but since, like I said, I did my trend analysis and I checked on the higher time frame, I don't really need to do that because the higher time frames are telling me that the market is bullish, and that's what I'm expecting to happen, especially because we have that supply zone up top, that gap slash supply zone that needs to get tapped into up there, right here. So yeah, and the beauty about this is once I actually do get that confirmation, I can actually trade and potentially make all that and trade all the way up to here, and that would be a great trade, or down here. So that's UJ, and then we have oil. And these pair, I trade more than this, but I'm only trading what's basically happening today because I only trade based off the economic calendar. And basically what that means is I'm only trading when there's actual volume. Without volume, there's no movement. Volume simply shows you when money comes in and out of markets. That's why I sometimes put it on my chart like this when I'm looking at. I'm gonna go ahead and show you. So yeah, hold on a second. Let's get this set up. So in New Zealand JPY on the 4 hour, you can clearly see that we are downtrending now. We were uptrending because we had all of this market structure going upwards down here, and now the market is positioning itself to be bearish. That demand slash, that supply you see above is simply supply from the previous trend, and yeah, so that's from the previous trend. It's And yeah, so that's from the previous trend. And what I'm going to do is I'm going to basically um, go on the weekly chart. And yeah, so we're going to go ahead and ignore the video that just popped up and pretend that that video that popped up wasn't there. Anyway, as you can see right now on the weekly chart, we see that gap right here. Price tapped into that gap and went below. I don't even, wait, actually, why is that even there? Yeah. That, oh yeah, that was there to signify that. And so that we originally were in a downtrend, then that trend went from being uptrend to a downtrend now. And the point is that uptrend was a short-term trend because it had little price action, little movement, not a lot of expansion. And so right now in New Zealand JPY, I'm looking for sales. Specifically today, possibly because we have Japanese news happening tonight on the economic calendar at 7:50 p.m. We have JPY news, 7:50 p.m. BOJ monetary policy meeting minutes, and that is basically going to add supply or demand to the market. And yeah, and so I only trade based off the economic calendar, and I trade the futures based off session timing. So right now, you can see the blue lines represent market structure bullish. Now it's changed from being bullish to being bearish. And then what's it called? So now that it's bearish, it went straight up and straight down, and yeah. And so the fact that it went down again is why I'm looking for more sells. Because initially we had price come down and then it came up again and it came down, and I'm looking for more sells, but I'm not looking to sell here. So right here we have some buy side liquidity on the short term, if you guys are familiar with that. Buy side liquidity. And then we have an order block right there, right? And that order block is where I'm looking to take a sell trade. And I could buy and look for a confirmation on the 5 minute and look for a breaker structure on the 5 minute and then enter the trade and target that buy side liquidity. But I'm not going to do that because I like to take the biggest pie. I might do it if I see a setup I like. So if I see price go like this, break that, come back down and break this and head up towards there, I might take a demand trade. And what that will look like is I will actually trade that all the way up to here. So I'll do that. And then and then it'll go up there. And then that's basically where I'll target. The same thing down if I do that. And that's pretty much it. So yeah, that's pretty much all I wanted to say on NZD JPY. That's pretty much all I'm doing. So I hope you guys liked it, and peace.